Good morning, everybody. Looking at the big picture here on the SPY chart over the last few months. Small gap up this morning on this 90-cent range that has formed over the last few days above 156.10 or so. Up a little bit there. We zoom in on the last 5 days. You can see here we are just slowly grinding up. One thing you can say about these last few days, this range here, which was pretty clearly defined, is it's a little bit bigger than what we saw right before the volatility had picked up a few weeks ago. We were seeing like 50, 60 cent ranges back in early February, and this is, these ranges here were about 90 cents, 80 to 90 cents, which is a little bit better. So that's something to keep an eye on. Maybe we're creeping our way towards $1 plus ranges. I think certainly as the SPYs move higher, it becomes a little bit easier just on a percentage basis for those ranges to inch up a little bit. But it's the same overall theme, which is strong underlying bid in the market. The momentum players can have a field day on the few stocks that they like to push around. It started with Netflix yesterday in the pre-market, and then continued on the open with Cree, and by the midday everyone went to the third favorite momentum stock, which was LinkedIn. And that's, there's a few true old school momentum traders left out there, and after those moves in Netflix and Cree in the morning, they were ready for a move in LinkedIn, and that's what you got at 1 o'clock. So there was plenty of fair warning that was probably going to happen. You had a tight consolidation here, and certainly the momentum traders that I know were involved in this move right here from 178 to 181 later in the day. It was a layup. Many of them took it overnight, and they're now rewarded with a 5-point gap up in the pre-market. The stock that has been creeping up, and we looked at getting long this, and I actually did get long this back here on the 7th, is GMCR, and this is a pretty nice uptrend on this one. So here's where it is. Here's the earnings report here on the 7th. It came off a few points after the earnings report, but now has been in a 2-week uptrend. You had an uptrend, a few days of consolidation. The break, this is when we talked about it here. So perhaps the funds will be moving to this one today. Not even 2 days of consolidation yet after this uptrend is complete. It moved sideways yesterday. Perhaps they will go to this one next. Today, here's the weekly on this one, and I suppose 57 or so, about 2.5 points away from where it is if they were going to push that. The one warning sign I would say is the volume hasn't been that great on it, and Einhorn still is a big short in it, so maybe that's why they haven't tried to go crazy in it and not pull too much attention overall. Let's go to, not much coming up on the scanner yet. It's still early. Why don't we start with Amazon AMZN, which caught the downgrade from JP Morgan this morning. Obviously they were very bullish on it, had a 333 price target. They lowered that to 300. Not sure what their reasoning is there, but when an analyst is very bullish on a stock and then they do a downgrade, that does catch the market's attention sometimes. So here's what we look like on the daily. Right now you can see it's flirting with the support over the last few days, which is around 270.50. And you can see going back to mid-February there was resistance here at this 270 level. So you'll know on the open pretty much what's going to happen with this downgrade. You have this range that was forming here. It was probably getting ready to break, and the downgrade is bringing it down to the bottom of this range. So the way that I would look to play something like this is first move on the open. If you see the move from 270.50 down to 269, 268, look for a little bit of a retracement up into the 270 area, and then put your short on and look for the bigger move to 266 to 264. And if it's going to support here and get back above, let's say 272, could be just business as usual with people using this downgrade as an opportunity to get in. The great thing about that is I don't have to have a strong bias. I don't have to really commit myself. I can wait and see where the price action takes us. So far, so far we can see that it's been bought a little bit. It was down here at 269 before 8 o'clock this morning. The volume has come in a little bit, and it is 1.5 points off the low, but we're going to need to see some more volume come in on that one. I had mentioned LinkedIn already. That's gapping up this morning. The race is on to 200 at this point, so this is just everyone's tripping over themselves to get into this one. Big move after the earnings, consolidation, another big move, nice consolidation, clear upside break here. Something measured probably takes us up to the 186 to 188 area, but it's a foregone conclusion for me, unless some major negative catalyst comes out on this one. They're going to try to push this to 200. So how do we play this on the open? Some sort of dropout, maybe not all the way to 181. I think it's just too many people fighting to get in at this point. But maybe a dropout here to 182. It's peaked out now at around 184 in the pre-market, so that would be about 2 points off of the pre-market high. You're just going to have to try to find a way to fight in there for a small position. The best thing, the safest thing always to do is, I'll go back to yesterday, and this is what's killer, and I think I tweeted this one out at right here at around 11:45 yesterday, where I said, is this going to be the next one to go? Korean Netflix had already gone, and this was my next likely candidate. From 12 to 1 o'clock, all it did was have a tight horizontal consolidation. This is the dream. You don't get these every day in the market, but basically, when a stock you think it can break out and you get a tight horizontal consolidation where you can define your risk and it's very small, a lot better than up-down price action. Compare it to an Apple where you're just getting this up down, look at these tails here, 2 point range. This is actually a pretty good consolidation right here between 1 and 2. But those are the types of things we want, is these very tight consolidations, because once the range is established, we can try to nibble towards the bottom, and we have a very clear defined break area. And by the way, when it did break to the upside, here's the volume here. That's how you can tell everybody was watching and waiting for this, and that's why it's a good breakout. So those are the types of things that we want to look for in the setups that we think are the strongest or the weakest. If you get these types of areas, everyone talks about conviction, A+, and all these different names they like to give their trades that they want to put risk on. Call this whatever you want. The tight consolidation trade after a stock has shown some sort of strength. To me, this is the A++, top of the report card type trade, where you would put risk on. If you just made these trades, you can make a career just out of getting involved in those situations and not all the other stuff that you do. Let us look at BBRY. This is another one that came up in yesterday's morning meeting. What did we say about this? We said this one has got a lot of momentum now after years of being an awful trading stock. It was great in 2007. Was awful for starting in probably 2010-11. It's good again. It's a low price stock that's moving a ton. It drove on this day here. There was follow through. It drove to the downside on the open here. Not that great here, the secondary move, but it did go lower. Yesterday, 3 o'clock, powerful drive above $15 a share. That should, the alarm bell should be going off in your head. You should be getting involved when you see a drive like that on a spike in volume. The first move took it to $14.80. The second move over 15. By the close, it's at $16. It's active in the pre-market today. How do I judge if it's going to be a long again or a short? And we'll compare this to MLNX in a second, because I think this is a good example from yesterday, MLNX. So here's your drive up, here's your consolidation at 1560, your second move to 16. It was gapping higher this morning, so it looked like it was going to follow through, but now it's coming off a little bit here in the pre-market. I'm going to know at this 1560 area what it's going to do. The same way that in MLNX, we saw this very strong move here, and we said, okay, there was another drug news yesterday, so it was gapping lower, but we want to see what it does here at this 62.35 consolidation from the prior day. If it comes down into this area and starts to support above it, we'll look for the strength from the prior day to take over again. If it consolidates below the area and then breaks to the downside, we'll trade it on the short side. So it's no different, different type of stocks, different sectors, but the price action is going to dictate. So this BlackBerry comes down at 1560. I notice consolidating above, starts to move higher, traded on the long side for a move to 16.5. Comes back down to 1560, goes below, spends 30 minutes or more consolidating below this level, breaks to the downside. I'll trade it for a move down to 1480. I just want to find things that have catalysts. I want to find things that people are rushing to get in of or rushing to get out of, and understand that the direction and the price action and where the volume is coming in, that's going to dictate how I'm going to trade the stock. I don't need to have a strong bias. I don't need to have conviction before I actually see what the stock is doing. Yesterday, EXPR, just a reminder on how we judge whether stocks are going to gap fill or continue. When something gaps down a lot, puts in a low in the pre-market and has a range, if the first move is up, and we talked about the range in the pre-market, if the first move on the open is a drive breaking in the direction of a gap fill, then we look for a gap fill. A lot of people got involved in the 17 area here. I know that 1760 something was possible resistance, and it did fail there after this consolidation broke to the down here, so this would have been a spot where you could get flat, but over the next hour it creeped back up, was very, very tight. You could have nibbled to get back in. Another rule that we look at is looking at it on the 15-minute. The bottom of the range here, going all the way down to, let's say, not even all the way to the bottom of the pre-market, let's say 1580 where it started to support. It goes from 1580 to 1760. How big of a move is that? That's $1.80. Subtract 20% from that, 36 cents. That brings it down to around, I don't know, the 1730s. If something is moved and it's pulled back 20% and is still consolidating in the top 20% of its range, that is a strong stock. That is not a weak stock. Be ready for it to continue in the direction of the move from earlier in the day. It breaks to the upside here above 1760. Get involved for the gap fill. Hasn't quite completed. The gap fill, 1860 was the low of the last couple of days. That's what we call a soft gap fill. A true gap fill is at the prior day's close, which is 1886. Looking at it in the pre-market today, doesn't seem to be doing anything. So let's look at this. The last consolidation from yesterday was 1820 to 1850. Let's see which direction it goes there. If it breaks to the downside here, that doesn't necessarily get me short. Maybe if it comes down to this 18 area here, doesn't support at 18, starts holding below there and starts moving lower, then maybe I look for the move back down to 1730. The burden is on the sellers at this point. Phenomenal move yesterday. VMW. This is important. Look at the 6-month chart on this. It's now above $80 a share. How many times after this gap down were people looking for this thing to go to the upside, and it came down hard, was a phenomenal short into the low 70s. Yesterday's move, it drove on the open. It's inside of this gap area here, so we would look for some follow-through. People definitely on the desk got involved in this one, had the strong drive on the open. This is the traditional, pennant pattern on the 5-minute. Drove higher up to $80, had the pullback almost exactly at 80. This was a long for the rest of the day, and is pre-market right by the pre-market high. Not that big of a move here in the pre-market, considering the market is up right now. We want to have alerts set at 81.20. See what happens if it pulls into this area in front of 81. This is definitely worth putting some risk on. It's important that it's inside of that large gap now. I already mentioned GMCR, EXPR, VMW, SRPT. It's after this move here from 26 and the failure at 32, it's been very tight between 30 and 31 or so. Make sure you have alerts here at 32. You need to be involved in this stock if it's above $32 a share. That's all I'm going to say about that one. XEC is getting very steep, but it's worth watching. Yesterday again was on the radar. That's where I pulled it off of. Big move on the open, didn't really do much the rest of the day. Pull back low here is 73.80. It's getting a little steep. Make sure you take a look at it, see what it does at that 73.80. Perhaps if it breaks to the downside and gets below 73.5, it has a retracement to 72. And above 74.65, you can look for another move there. It also is getting extended, so if it does break above 74.65, goes up a half point, and then pulls back, you could probably get a lot of people trying to get out of the stock on a short-term basis, creating a hard down move. And those are the stocks I wanted to talk about. SPY here, above that 156.10. The traditional thing to do is to look to see for a little pullback on the open, maybe to 156.20 to 156.10, to confirm that this is starting a new uptrend and a new higher range. Normal move based on volatility we're seeing right now is probably right around to 150, 157 or so. And on Netflix, I probably should just check back in there with that. You have this 192, which is the important. This was the higher low. 192 was the higher low after the initial pullback, after it put in its high here at 198. Should be an important level today. After 10:30, 11 o'clock, if it's above 192, I would look for a leg to the upside. Below that, I would be careful trading it on the long side. Came up here quickly in a hurry. As always, be patient and good luck.